Hello everyone, it's amazing to be back and thank you very much for showering your love on my previous video. The views were fantastic and thank you for subscribing. Now today, I'll be talking about what's happening in Indian equities as well as what's happening in US equities. So let's begin with the US equities first. Now, in the U.S. equities, we know that the trajectory is on a forward part, but still there were talks of government shutdown. But that didn't really change anything. And overall, there is a talk of lots of tariffs by Trump government, and that's actually spooking the market to some extent. It's only about 20th I guess it's 20th of January when Trump takes on as the president. But till that time, it can well be in a channel. The market could still be in a channel, but nothing really major coming out. I think there would only be positives in terms of couple of wars that are going on. The Israel and Palestine, as well as Russia, Ukraine, that could come to an end, and that could be it. The second one, let's talk about the Indian stock market. Now, the update from Indian stock market is we know that in the last 3 months, if I just look at the chart, it just came down from 26,200 to about 23,727. So there's quite a big fall there, and currently the Nifty 50 is trading at its 200-day moving average. So that's quite a strong support. I think all of us would want that this support shouldn't get broken down. But let's talk about the reasons why there was a strong pullback in Indian equities. Now, the number one reason is the foreign institutional investors, or the FIIs, are pulling their money out of India stock market, and the prime reason is recently there wasn't any strong GDP growth. I think it was less than 6%, if I'm not wrong. The latest numbers aren't really that strong as well, and the corporates have said that their profits are falling, and at the same time, there is, because of the higher taxes by Indian government, the consumption has taken a big hit, and that's why you will see that most of the large caps are not able to perform. Be it consumption or be it auto. So these sectors are not able to perform. Or let's say about paints also. All of us know what's happening to Asian Paints. By the way, if you would have watched my previous videos, I said that why I don't like Asian Paints on that price, and I think today Asian Paints is trading at quite a low price. It's about 2,284. So it has fallen from that levels as well. It was there in a channel for a long time, but yeah. So let's talk about the topic why FIIs are pulling their money out. So falling profits, the falling GDP, and another strong reason is the falling the depreciating rupee. Now today, I think the INR, you would need about 86 INR for $1, so that has come down from 83 or 84. That is also causing, so the depreciation of about 3 to 4% in about a year's time in Indian currency has also led to the money flowing out. And on the other side, US markets are not really bad at all. Their GDP is growing at almost 4.5, and I think the bonds are also giving between about 4.5 to 4.6. That's not really bad either, because the risk in Indian markets are huge, and the reward isn't really in their favor, so they're just taking their money out. So that's the reason why we have the Indian stock markets going down. Now, let's talk about a couple of stocks. As you know, I like both Indian market as well as US equities. So one stock from US equities today would be it's a stock that has started recently following, and I think I really like it. In terms of their performance, it's called Build-A-Bear. Ticker symbol is BBW. Now, if you are in the developed countries, you will see that there is a store called Build-A-Bear Workshop And what happens is that it's a store wherein kids would come with their parents. They would actually build a soft toy themselves, and then later on they get a birth certificate of the soft toy that they have built themselves. So it's like an experience that they sell. Now, they've been doing this for a long time, and why do I like the stock now is a simple reason. If I look at their return ratios, if you talk about their return on assets, equity, or even ROI, it's north of 20%. So 26, 43, and 19.53. If I look at their recent sales, so they did grow by about 11% in sales and about 40% in EPS growth, or the profit growth. The forward PE is about 11.05, and the current PE is about 11.69. Now, and let's talk about the debt. I think so. The debt to equity is 0.76. So the 0.76, though it's little less than 1, it's more than 0.5. But hang on a minute. I mean, the company is able to cover its interest cost quite comfortably, and that's why they have a very good profit margin. So yeah, its operating profit is for 13.08. Their gross margin is 55%. That's quite nice, and the profit margin is the final profit margin is 10.5. So that's something that is really exciting me. Overall, the stock price is trading well above its 200 DMA, and yeah, I mean it's in an upward channel, so yeah, that's why I like this stock. There are few brokerages who have also given it a buy rating, including Jefferies, but I like the price. The valuations that this stock is trading at. So after Build-A-Bear, let's go to the next stock from Indian equities. This is something that I've given before, and on this channel, I think it was just few videos. If you just scroll my videos list, you will find this stock called Shakti Pump, and today I'm here to share with you that I think the price of Shakti Pump has risen by almost 30% in last 15 days. So we know that Indian equity markets are not performing well, and they're just coming down. But here is one stock that just wants to go higher. It's Shakti Pumps, and even today I see that its stock PE is about 37.3, and I've already shared this on my channel that the ROCEs as well as the ROEs for this stock is quite nice, and at the same time, if you look at its profit as well as net sales growth, it has just shot up from 6 crores to 101 crores profit in net profits in the September quarter. Now, why do we have such a solid growth in Shakti Pumps? Is because lots of orders that this company is winning. It's in the solar water pumps area, and this is something that is backed by the government, and I think recently they won a major order as well. But anyways, this is a high profit growth stock. At the same time, the return ratios are quite nice. The interest coverage ratio also isn't a problem, and if you look at its borrowings, the interest, it's just 11 crores in the latest quarters that they had to pay on their debt, and 149 crore was their operating profit. So yeah, so there's a good coverage there as well. So debt wouldn't really be a big problem for them. As I would say that always be optimistic with stock markets. It's just, we know that we are in a downturn, we are in a pullback situation in Indian equities, but always be invested in companies that are growing their profits, and they are available at cheaper valuations, and companies which are doing good. So these should be in your portfolio, especially if from a 2 to 3 year perspective. Another thing is Build-A-Bear that we discussed today. Again, I'm bullish on this stock, so let's wait for the next results, but I think it should be good. Anyways, thank you very much for watching my today's video, and I hope you would like it. If you like it, then please hit that subscribe button if you haven't yet subscribed, and please feel free to comment, and I would be there to answer any query that you have. So thank you very much, and I'll see you next time. And yes, a Merry Christmas and wishing everyone a very Happy New Year. Thank you. See you all in 2025.